Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. This is our forex technical analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. Before we pull up our video, we always want to start off our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. You can lose all of your money. Any strategy we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. As we said, this is our forex technical analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. In each video, we look at the prior session's price action to come up with key support and resistance price levels. We'll review the gold chart to come up with leading sentiment. We'll try to create a low volatility and inside bar watch list, and we have an education spotlight at the end. Please send your feedback and comments to contact@dmbfx.com, and let's head to the charts. As we look at the week that was and what's going to happen this week, we can see that it's going to start off with what's going to happen in Greece. The parliament in Greece is supposed to vote on the new austerity measures to receive the second installment from the EU and IMF bailout package. However, from what I understand, they're asking for another $300 million in cuts. And once again, we're seeing more resignations in the parliament and more riots in Greece. So we'll see what happens. And what was supposed to happen this weekend, possibly tomorrow, possibly could be extended by this request for $300 million more of cuts. And of course, in addition to that, they still have to get the agreement to swap the debt with some of the private sector investors. So it still remains something to watch. And then you look at our charts. We basically consolidated many of our charts at key price levels, setting up a potential risk reversal here if the market doesn't like what they see out of Greece. And of course, it could be a little bit of the sell the news also. So definitely interested to see what's going to happen there. As far as what we're going to watch this week, we're going to be watching for the GDP numbers coming out of Europe and Japan, and the RBA numbers. Let's start by looking at our market sentiment leaders. So we're going to start with the dollar because of that inverse relationship. And we can see beautiful here, but the months of January, February have not been kind to the dollar. Trying to find a little support here at 79. Hasn't successfully done it yet, but we're starting to see it base down a little bit. And again, with the continued Greece debt, euro concerns, maybe it's fine. This pullback that happened is starting to base out until probably some type of direction is given there on the euro. You might find a little safety here in the dollar. With the dollar stabilizing just a little bit, I'm not saying it's there, you can see that the gold, which has rebounded, has found its sideways. And again, what we told you was right here, 1760. This is where sellers found value before. This is where they're finding value now. Gold definitely sideways. Also, crude oil. It's in this range once again of 95 up to 102, and it came all the way back down. Look at that. And we've been talking about this for a while. It came right on down here, air kissed that 95, 96 price level, and it's on its way back up. We'll see what happens if it can break 100 again, but overall, it's still sideways. We are starting off with the Euro daily chart. And the main thing to look here is this range. We thought the market was allowing the euro dollar to move right up into this new range, and then of course Friday pulled us back. So as we watch to see what happens with the Greece deal, this is again that risk reversal we talked about. If we don't hold on to this 1.318 price level, we're back in this range. So we need to see if the buyers will continue to find value here and be able to hold us into this new range. As we come over to our 1 hour time frame, we can see that we're sitting in a neutral zone. The euro is in control. The dollar is in control. And you can see that when we had this divergence here and here, and we compare that to the price action up on top, we began to move, and then we got this real big divergence here. That's where we got our big price action down. So We can see the dollar trending up here, along with the euro trending up ever so slightly. However, it is below its long-term moving average. So if the dollar can stay in control, we'll see this continue to move down. But you can see right now our pairs averaged against each other are starting to converge, which gives you this sideways price action. So it's going to be interesting to see what happens. Again, the fallout from this Greek deal is going to affect the market as a whole. Now here's a good example when I'm talking about with the pairs being at key resistance. Here the market on the pound dollar on the daily chart hovered here at its resistance at the 200 moving average and the resistance at 1.587. And then with Friday's price action pulling us back to the 20 moving average. So one thing to look at though is that the volume on this pullback is a little bit lighter than the big push up here. Here we are pushing up and we have good volume. A little bit lighter volume here on the sideways price action and the pullback. So if we can get that reaction that the market's looking for, we may go back and test at 1.58 again. Otherwise, we'll have to look at coming back and testing the downtrend line and the 1.552 price level. Here on the 1 hour time frame, we were in the buy zone, but now we're sitting in a neutral zone. The dollar is in control here, but we can see price beginning to converge to each other, and charts look identical. The dollar is trending higher. The pound is trending higher, just below its moving average. So the euro dollar and the pound dollar look very similar, although the pound dollar is a lot more bullish. Finishing off with the dollar franc, we can see that the market has found support at this 0.9114 price level. And again, this if we can get the reaction we're looking at, because the dollar also is consolidation, as we talked about earlier, we'll see this come back up and test 0.92. Otherwise, we're going to break. And this was once a very lovely uptrend here, as you can see. We may have to start saying we're looking at a downtrend. Definitely sideways to down. Here we are in a neutral zone. That converging of the pairs here is much closer. The dollar was in control. Now we're looking at a decision point here being made. And again, all these individual currency pairs look the same. So it's really going to be the reaction to both the Greek deal and some of the preliminary GDP numbers. As we look at our watch list, first starting off with our low volatility watch list. This is our 1 hour time frame using Bollinger Bands, looking for that consolidation. Again, as we said earlier, the market is consolidating at some key resistance price levels. However, right now we're only going to be watching as we come to our volatility watch list. In our inside of our watch list, we're looking at consolidation, as we talked about earlier, and right now we only have the dollar yen, even though several pairs are at key price levels. On the 1 hour time frame, we're only watching the dollar yen. But again, we saw several pairs basically consolidating this week at the 200 moving average, at resistance price levels. So it'll be interesting to see what's going to happen from here. As far as our inside of our watch list, which is looking at the range of Friday comparing to Thursday, we are going to watch the euro yen and check for a breakout in the direction of the trend. We're going to finish off with our education spotlight. And, again, the thing that many traders ignore or overlook is the fact that you're going to have a slump. It happens in sports. It happens in baseball, basketball, football, whatever it means. Every great athlete has a slump. Every great trader has a slump. And unless you're mentally prepared to deal with that slump, you're either going to blow out your account or you may just drop out of trading because you continue to force the issue instead of making adjustments as needed. In baseball, do you move closer to the plate? Do you move closer to the pitcher? As a pitcher, or as in football, do you change your release point of the ball? Basketball, same thing, change the release point. Sometimes the market changes and we have to change with the market. Or we have to be honest about whether or not we are following our trading plan to the T. So you really have to, it's overlooked because no one wants to admit that they're going to have a slump. Nobody wants to admit that they're wrong. And we know that trading is not about right or wrong. It's about a system that we can develop positive expectancy, and it's about the cost of doing business. So being able to handle loss, more importantly a slump, a series of losses, is key to your success as trading. As always, please, we want you to like, comment, and subscribe so you can get our information. You also know about our great resources for you. Obviously, we want to emphasize that if you don't feel comfortable trading yourself, let our expertise with one of our managed forex accounts. Let us come and work for you. Individualized trading plan. We work with the leading brokers, full transparency, so you don't have to worry about being a part of some American greed episode. In the end, it's not about the system or the indicator. It's about your ability to make educated decisions, and more importantly, your ability to handle losses so that you can live to trade another day, or your inability to handle losses and you blow out your account. Thanks, guys, and I'll see you next time.